Hi, folks. Good afternoon. Welcome, welcome. Thank you for joining us. Hopefully, you're expecting to be at our webinar that's being run by our partners Nuven, and it's got the very exciting title of Understanding Joint and Several Liability. We were just chatting before we got you in to say, now is the time to listen carefully because it's very technical. I'll let Patrick and Ian explain to you just how exciting it is. I've promised to try and listen very hard because it's not going to be technical and dull in any way, is it? No, it's going to be technical and insightful. So I'm Liz. If you don't know me, I'm the Deputy CEO and Policy Director here at the National Care Forum. And just got a little bit of housekeeping. Could you pop your name and organisation in the chat? That would be really helpful for our speakers. I don't know if there's any note takers on the call. How do you feel about AI note takers, apart from ours? We always transcribe for notes. But
well, I'm happy if people want to take notes, but we have a deck that I'm happy to circulate afterwards, and Ian or I can always take questions if they occur to people after the end of the event. If they would like to pick up, they can reach out to Ian, and Ian can either take it or forward it on to me.
Brilliant. That's really helpful. So just in terms of how we're going to use our time together, we've got an hour. Ian and Patrick are going to introduce themselves and get going. We thought we'd devote kind of 25-30 minutes to listening to their presentation, where they kind of describe the challenge that they're going to explain to us because of some government changes in legislation. And what we need to do about it, and then we'll move into Q&A. So we'll have a good chunk of time for Q&A. We think it would be helpful if things occur to you while you're listening. Could you pop your questions in the chat, and then when we've finished kind of going through the information that Patrick and Ian are going to present to us, then we can pick up that Q&A and we can do some dedicated questions and answer time for the sort of second half of our session. We're going to understand the problem, and then we're going to consider solutions. So I'm going to stop there. Thank you for joining us. It's great to see you, and I'm going to hand over to Patrick and Ian.
Thank you, Liz. Appreciate it. So I'm Patrick. I will be giving the bulk of the presentation. I am the Group Commercial and Legal Director here at Nuven, and I led our response to the changes in tax legislation that we refer to as JSL, or Joint and Several Liability. Ian is my Sales Director at Solutions. And Ian, do you want to introduce yourself briefly?
I'll be very, very brief. Hello, everybody. There are some faces and names I recognise, so hello to you all. And to those I've not met before, hello. The reason I'm on the call is anything after the fact, I encourage you to speak with myself. And if there's anything I can't answer for you, I'll liaise with Patrick internally and we'll come back to you. The idea is that if you want to look at a joint and several liability risk assessment for your own organisation, we can help you with that. Thanks, Patrick.
Thank you. And Ian will run the deck. If you can bring the deck up, please, Ian.
I most certainly will.
So to Liz's introduction, I was saying earlier, this is one of those unfortunate areas, even as a lawyer, of being vastly important and rather technical and dull as well. But I will do my best to make it breezy and accessible. Thank you. And do you want to flick on to the next slide? So what we'll go through today is I'll give you a kind of quick overview of umbrella companies, because I think that's useful context for people to understand how and why the law has changed again. I'll take you through what the change in the law is, and then some of the key terms and exclusions, because part of what the government has done that's very unhelpful is use terms that are used in the temporary employment industry world and given them completely different meanings. And one of the things that we have found as we've gone through is we've spent a lot of time explaining what words mean, unfortunately, for the purpose of legislation. So we'll cover that off in detail. We'll then look at some exclusions where you as a business might look at your supply chains and start to assess risk in your own businesses. I think we need to touch on, obviously, given this audience, the interaction between joint and several liability and the nursing concession, because they do interact. And then I'll talk a little bit about general risk management, and then we can have a Q&A at the end of that. So that's kind of the format of what we'll talk through. So little history of umbrella companies, particularly as they're used in the industry. These businesses effectively didn't exist in the 1990s, maybe in the late 90s and in the early 2000s, as there was a surge of self-employed contractors, driven largely by the new Labour government's tax legislation, which made it considerably more profitable as an individual to work as a self-employed contractor as opposed to being in employment. And those people, obviously, if you're an individual and you set up a company, you're not necessarily hugely skilled at the admin burden of running a company, which was more back then than it is now. So what happened is, largely coming out of the accountancy profession, actually, was there was a proliferation of businesses to set up these individual companies to manage them on behalf of self-employed contractors, and they became known as umbrella companies. Now, the tax integrity of those companies, and this will be a persistent theme, was not particularly great. And in 2007, the government introduced legislation to create debt transfer, where if a contractor failed to pay the correct tax, then the accountancy firm or other business managing that for him or her picked up the tax instead. And obviously the sector changed overnight because none of the operators of these schemes wanted that kind of tax burden. And whilst people thought that would be the end of it, actually what happened was the sector moved on to a tax loophole that many of you may be familiar with, which was travel and subsistence tax relief. And this was effectively umbrella companies started to focus on the tax benefits of employing temporary workers on particular types of contracts, specifically 336 hours, overarching contracts of employment, and then claiming the tax reliefs. And those were so great that effectively two things happened. One is it became absolutely cheaper to, if you're an end client, to employ a temporary worker via an umbrella company on a 336-hour contract of employment. The tax relief was so great, it became in an absolute term cheaper. The other thing was employment agencies basically at that point just started to fight for volume. And so they were supplying on much lower rates, even free, in order to take advantage of these tax reliefs. And unsurprisingly, although this was a perfectly legal tax relief, the government closed it down when they worked out what was happening. In 2016, that came to an end. Now, what I've put here is since when the umbrella sector has focused on outsourcing payroll functions and employment liabilities, credit, and reducing the administrative burden. That is true, but I think it is also true to say that umbrella or the less ethical end of the market has come to focus on what you might kindly describe as very aggressive tax planning, and HMRC would describe as outright fraud. We're talking about using bills of exchange to pay tax bills. We're talking about mini umbrella fraud. There's also various co-employment models. And effectively, about 18 months ago, 2 years ago, HMRC lost patience with all of this. and introduced joint and several liability to deal with what it viewed as tax fraud. Ian, do you want to move the slide on, please? Now, why did they do this? So their analysis for 2022 and 2023 showed that 700,000 people were employed via umbrella companies, and nearly 40% of them were not having their tax correctly accounted for, and that was leading to losses in the order of £500 million. And obviously, the country needs to raise revenue everywhere it can, and that kind of underpayment of tax gets HMRC's attention. Hence, they brought in the change in the law, which they estimate will generate another circa £3 billion in tax revenue by 2031. So very significant numbers in the umbrella industry were driving government thinking. So what has the law changed, or how has the law changed? So as of 6th of April this year, a relevant party, and I will come to that, what a relevant party is in detail, is now jointly and severally liable with an umbrella company. Again, I will come to that later, for the payment of PAYE NI liabilities for umbrella company employees. Now, key distinction is this is employees, so we are talking about Chapter 11 of the Income Taxes, Earnings and Pensions Act. A lot of, and I will cover this in more detail, a lot of temporary workers are employed on contracts for services, which is covered by Chapter 7 of ITPA and sits outside this. We are only talking about Chapter 11 employees here. But where there is a Chapter 11 employee, and for whatever reason, the tax is not correctly accounted for, instead of going to the employee, HMRC can now go to a relevant party and just say, you need to pay me that tax. That is what joint and several liability is in essence. It is where multiple parties are liable for the same debt. So that is the fundamental change in the law that came into place. It came into place on the 6th of April. Ian, do you want to move on? So this is the key definition that if you recall one thing from this webinar, I'd ask you to recall this, because it's the thing that's probably caused the most difficulty when we've been talking to our clients and also to our suppliers. For the purposes of Chapter 11 of ITPA, and only for this purpose, an umbrella company is any business which employs a worker to personally provide services to a client, to a third party. It is in the business of supplying that labour, i.e. it's not incidental. It's not a company in which the worker has a material interest, so it's designed to kind of exclude personal service companies, which are obviously sit within IR35, and it meets the umbrella company arrangements conditions. And they are effectively that there is a contract between the employer of the worker and the person to whom the labour is supplied, and under that contract, one of two limbs is met. The services of the worker are provided, or the business is paid for the services. Now, you'll see that does cover umbrella companies as we typically talk about them in the industry, but it actually also technically covers an employment business. And this is one of the things that I think people found very difficult to get hold of as an idea, that for the purposes of this legislation, an employment business is effectively an umbrella company. Now, you see at the bottom there, and we will circulate this deck, we cover off some other incidental matters that aren't covered. But for the purposes of this conversation and this audience, what you have to understand is that an umbrella company, as we normally use the term, is an umbrella company, but so is an employment business. Okay? And that's important when we look at relevant parties. So, Ian, again, if you can move the slide deck forward. So a relevant party, which I hope you recall is the person who is jointly and severally liable for missing tax, is a variety of companies depending upon the situation. So if the supply chain is you as a client with an employment business supplying labour to you, and there are no other suppliers in the chain, then you, the end client, are the relevant party, i.e. if tax has gone missing, or if PAYE and NI has gone missing, and HMRC come to you, you would have to pay that missing tax. Okay. If there is another party in the chain, so say that you as a client, there is an employment business, employment agency, and then an umbrella company, then the person with the contract with you is the relevant party. The client is not a relevant party in those circumstances. It would be the employment agency. Okay, and then 3 and 4 are effectively anti-avoidance provisions. What they effectively say is if people try to avoid this legislation by offshoring their arrangements, it's the first party in the chain who is onshore, i.e. it's either you or the business you contract with if that is onshore. Now, there are some exceptions to this, one of which is us, but I'll cover that briefly at the end, because these are the key points, and tripartite contract neutral vendors are a slight oddity here, but I will cover that off separately. So that is what an umbrella company is and what a relevant party is. So I'm sure you can see here that the material risk for you is that you employ you employ temporary workers via an employment agency with no other parties in it, and they do not pay their tax. Then you are potentially a target for HMRC to recover that missing tax. So I will cover off a couple of exclusions. I have talked about them briefly in the context of what an umbrella company is, and also what tax is covered. But effectively, somebody providing through a personal service company who sits within IR35 because they own their own personal service company, the government has said that that is not within the purview of this legislation. We will recover that tax from either them or their company. We don't want to move that around the supply chain. And the other is people employed who are genuinely self-employed. So they're covered by chapters 7 to 10, of which for our purposes, chapter 7 is the most important. Are not covered by this because the legislation only applies to employees, and only covers chapter 11. So when you're thinking about risk in your terms, you do need to unfortunately make some of these quite nuanced analysis of where the risk is lying based on knowledge of your supply chain. Do you want to move a slide on? So what's the net effect of this legislation? So HMRC can now pursue relevant parties for PAYE and NI. Now, joint and several liability, it doesn't mean it's just underpayments. It doesn't mean that the other party won't pay or can't pay. In theory, everybody is equally liable. That's the essence of joint and several liability. Now, it won't surprise you to hear that HMRC has put out guidance to say we are going to try and recover tax from the employing entity in the first instance. But technically, that's not what the legislation says. It is obviously how everybody will behave. The second point I'd like to make is joint and several liability is a strict liability offence. That means there is no defence. If HMRC rock up with a tax assessment, with a tax assessment that says I have not been paid this tax, and you are a relevant party, you just have to pay it. It doesn't matter what steps you've taken to ensure this doesn't happen. Now, I'll cover why I think it's still important that you take those steps, but what you have to realise at heart is it doesn't matter. There is no defence to strict liability. And the third thing to pick up is when we've thought about risks from temp labour supply chains in the past, we've generally been thinking about tax avoidance schemes and those areas of poor practice I talked about earlier. HMRC couldn't take any steps where somebody had made a mistake or had become insolvent. And that changes with joint and several liability as well. There's nothing in the legislation that kind of limits HMRC's ability to use this legislation due to the underlying reason why the tax hasn't been paid. So looking at this, we have three real areas of concern here. We have the tax avoidance models that I covered, i.e. the deliberate non-payment of tax. We have professional negligence, i.e. somebody wants to pay the correct tax but made a mistake and ended up underpaying. And then you have insolvency. I think it's probably well known that any company in difficulty will stretch HMRC as one of the first creditors it stretches. And we all know that businesses will tend to keep going on longer than they perhaps should, because hope is the human condition, and we always believe that we will get out of these difficulties. But it doesn't matter if tax has not been paid for any of these reasons, or indeed any other reason I couldn't think of to list here. The relevant party is still liable for that tax. Okay. I will cover off joint and several liability in the nursing concession quickly, because it applies here, obviously. Now, I'm sure I'm teaching most people to suck eggs here, but the nursing concession is an extra statutory concession, which HMRC effectively allows certain clinical staff supplied by agencies to be treated as VAT exempt. Now, the way this interacts, I think, from a risk point of view for this audience, is, of course, that the agency must supply the staff directly. The concession does not apply to further links in a supply chain. So although the employment agency could apply VAT exempt as between a client and itself, if it was taking from an umbrella company, the umbrella company would have to charge VAT, and of course the employment agency would have to charge VAT up the chain or suffer 20% VAT leakage, which obviously the financial models don't sustain. So it does mean, I think, that it is more likely for this audience that you will have staff who are employed by employment agencies directly supplying to you, and therefore I think there is probably an elevated risk that you are a relevant party to the extent that you are relying on the nursing concession in taking the supply of clinical staff. Okay, so when looking at risk, I think you do need to consider the way this legislation interacts with other legislation which you might also be relying upon. Ian, do you want to flick a slide? Okay, so what do I think you need to do? I'm not sure the seniority of all of the audience here, but I think if you are not board members, then I think you ought to ensure that the board has a proper understanding of this change in the law. I think it came in largely under the radar. As I said earlier, it is rather a dry and technical point. That doesn't mean it's not of significant importance. But I think boards of companies who have significant use of temp labour need to understand their exposure to this legislation. I think that's point one. The second point is, I think, and this was standard in kind of everybody's thinking and guidance at the time, was that people would move to operate smaller, more secure suppliers. We have done that. Our preferred supplier list has shrunk very, very significantly because it allows us to manage this risk much better. I think the third thing is, although I've said, and obviously that is correct, that it is strict liability, and therefore to the extent that you have taken steps to mitigate the risk doesn't mean HMRC have to follow that. I think, one, you need to understand it. I think the answer to this risk is not a kind of dull fatalism that because if I do anything, it won't affect HMRC if they go wrong. I think that kind of goes the other way. You need to be more proactive and more careful in understanding that PAYE and NI is being paid correctly on a monthly basis. I would also hope, although this is new legislation, so I have no evidence to underpin this hope, but I would also hope that HMRC are pragmatic in applying this legislation, and therefore, even though they don't have to, they will give credit if people are taking steps to measure this. But I think even if they don't, you still have to know that the tax is being paid. I think the final thing I would say, because I've got Ian on the call and it'd slap me if I didn't, is look at our solution. We spent 9 months building us out a solution for this. We've partnered with SafeRec, who are the preeminent company in this domain, to ensure two things. One, that and this comes to due diligence. This is the due diligence that we do. That every single payslip, every single record of time that goes through our system is reconciled to a payslip, which is reconciled to a correct tax calculation, which is reconciled to the payment of that tax. That's what we have done for our business, but also for our clients. And I think it's perfectly acceptable to kind of take other views as to how to manage risk. But I think at the end of the day, you have to have an understanding of this risk, and you have to have mitigated it, because it would be very dangerous, I think, for any business with large exposure to temp labour to be blind to the risk, even if once they are not blind to the risk, they conclude that they have a different solution. But that is our solution, because obviously we have as a neutral vendor, we have a lot of money passing through our account, and therefore we have a lot of potential tax passing through. If you are interested, by the way, our finger in the air calculation is you take your entire spend on temporary labour and you take 20% of that. That is what should end up in the hands of HMRC as PAY and NI. So that's a kind of rough and ready reckoner for what your headline risk is. You can then look to shave it away through maybe looking at whether they're on chapter employees or on chapter temporary workers, they're on chapter 7 or chapter 11, whether they're employed by an umbrella company and therefore you're not a relevant party. But start with 20% of what we pay out to employment agencies for temporary labour should end up in the hands of HMRC. I brought that in just about on time in half an hour, so I'm happy to take any questions. You got any in the chat?
Thank you. I'm just looking in the chat.
Yeah.
So Paul says, what questions should we be asking providers of relief workers to reduce our risks?
So I think that's a good question. My answer to this is I wouldn't take this as a one-off event, because obviously employment statuses are dynamic, and I'll give you one example. I hope we all know that the government is in the middle of its consultation about 0 hours contracts and cancellations for payments for cancellations of late shift. Now, one of the possible results of that is that the government could determine that an employee on a contract of around, I think it's about 450 hours they're looking at, it's a bit higher than 336, is not a 0 hours contract, and therefore the legislation doesn't apply to them at all. And if that happened, then you could see a large movement of people currently on contracts to services into contracts for employment. So that's just evidence that this is kind of dynamic. I think what I'd be asking is, what do the supply chain look like? What are they paying tax on the basis of? And that would allow you to define those two questions. Are these employees inside the ambit of this legislation? And am I a relevant party in the ambit of this legislation? I think I'd always be a bit cautious, because I think employment agencies do have a slight tendency to tell you what you want to hear. So I would want to be making very sure of my answers on this. We took the view that and this is a question of scale for us, we took the view that we weren't interested in the employment status because it was more complicated to work out the employment status than it was just to check the tax has been paid. Because if you're checking the tax has been paid, you're just checking your suppliers have paid their tax. And that is easier than checking whether every worker they're supplied is on a particular contract. But depending on your scale, you may take a different view of that. I think the other thing that you could look at is ask to see evidence that their tax has been paid, i.e. literal screenshots of their HMRC portals. I think the difficulty of that is, again, you're just looking at absolute cash amounts. It doesn't tell you what you can't see. So in everything, I'd always be a little bit cautious and think what could be missing from what I'm finding here. But employment status, supply chains, and evidence that tax has been paid would be my kind of 3 bare minimums to understand what my risk position is.
So say that again. So, employment status.
Employment status, i.e. are they on chapter 11 or chapter 7 or some other chapter? What does the supply chain look like? So if there are companies who employ the worker who are further away from you than the employment agency, you are not a relevant party. So that is one. I would be interested in that question as to who is the employing entity, because don't forget there are other forms of poor tax behaviour out there that can have impacts. So just because the supply chain is longer doesn't necessarily mean you're completely in the clear, but you are from a joint and several liability point of view. And then to make sure that the tax payment for that entity is up to date. I think.
Okay.
So you always worry about what.
Yeah, Shabir's got a similar question about what can we put in our contracts with agencies to ensure they are fully liable for PAYE.
Well, I think the point is that they just are from a statutory point of view. So I'm not sure that there is that you can put anything in. You would ask for an indemnity if you ended up paying their tax. However, again, and sorry, I know this is all horribly nuanced. If gone bust and that's why they haven't paid their tax, the indemnity itself is not really worth anything. And so you have to start to think about how effective they are. I do think people should make contractual changes. I don't think people should just rely on contractual changes as the answer. Due diligence is always going to be the answer, assuming that your risk assessment tells you that this is something at a level that you should be concerned about. We had a look at a couple of the high-profile insolvencies in the agency world, and what we found was is about 3 to 4 months worth of tax. That's when HMR seems to move against a company to put them into liquidation for non-payment of tax. So if you have got an insolvency, it's going to be 3 to 4 months worth of tax, probably. Now, whether HMRC changed their approach on this with this legislation, again, I don't know. It's too early. I have no visibility of this. But our rule of thumb, is a 3 to 4 months. And that was across VAT and PAYE NI. One observation I would make is I know there was one profile, I don't know if people have come across SafeRec. SafeRec is our partner, but they also audit umbrella companies to make sure that they are paying their PAYE in NI. They did have a company that went bust. And I picked them up on it. What that company had done is paid all its PAYE and NI. It had stretched its VAT, but obviously VAT is not what we're talking about here. So again, when you're looking at this tax, it's the PAYE and the NI that you really care about. It's too easy just to drop in and think generically tax, PAYE and NI.
Can we just go back to that point about the 0 hours consultation that's out?
Yes.
Because I've yet to read it again properly in full. But we are
going to envy you that task.
No, I know. It's another one of those jobs to do when your brain is working very well, isn't it? But from our summary, so Finn in our team has had a look at it and done a bit of a summary briefing. So the challenge in the proposals seems to be that actually the number of hours that potentially might be in play seem to, in that consultation, seem to take you quite far from being a 0 hours contract person and potentially make you a part-timer.
So I
you,
think the range was huge. The range in the consultation is huge. It went from something like I can't remember the details, but it's something like 5 hours a week to 40 hours a week. It was literally full-time employment. But although the government has given a very clear steer that it views it's got a view around the bottom end of that. So this is what I think is a reasonable point of view. So it's less about what constitutes 0 hours. It's more about the impact. So the thing that I took away from that is if somebody is on a 0 hours contract, then it is the client who is obligated to offer them some form of employment relationship. And I think the consultation is worryingly unclear about what that means. But what it effectively means is if somebody meets the threshold, and I'm sure they'll insert some anti-avoidance here, even though you're employing them through an employment agency, if they're on a 0 hours contract, you, after 12 weeks, because let's assume 12 weeks is the threshold, although 2 is up in the air, you might have to offer them some form of employment contract.
Yes.
Well, I can see a world in which clients' responses to that is to say, well, make sure they are not ever a 0 hours contract. And therefore, employment agencies move their staff onto whatever that minimum is.
Yes.
But by doing it so, they move them away from contracts for services and Chapter 7 and into contracts of employment. And therefore, you see a mass movement of temporary workers who currently sit outside this legislation, inside of this legislation. Is that clearer?
Yes. Well, that was what I was going to ask, because it struck me that it would be favourable. It's favourable to keep the basically the answer we think for the consultation is we want as few a number of people in scope for the 0 hour contract provisions of requiring you to offer a job every 12 weeks or however many it is. Like, we want to minimize the burden. But this would strike me as another reason to minimize that burden, because this, depending on where it ends up being, as you've just described, you're potentially bringing a lot more people into this potential volume of liability. Yes. Okay.
Absolutely. I think I mean, this webinar is not about that, but I would absolutely encourage everybody to read that consultation and respond to it. I think the government is very alive to the idea that it has made promises to the unions around 0 hours and compensation that it wishes to keep, but also it's going to fail at absolutely everything if it doesn't grow the economy sufficiently. And therefore, I do think generally my experience when government and Quangos and the like have been consulting, they've already made their mind up, and it's a little bit for show. They've already told you what they're going to do, and they only don't do it if it's spectacularly idiotic. Here, I think they genuinely are interested in the views of employers and clients, and I think they genuinely will be responsive to it. And I think if clients will miss a trick if they don't go back and then complain that things were imposed upon them. I think there is an opportunity.
You mean, when you say clients, you mean clients of employment agencies?
Yes, sorry,
yes,
I do mean
yes,
and indeed employment agencies themselves, and all of those businesses who are engaged in temporary labour supply chains. I think they will have a voice, and I think I would encourage everybody to respond to that. This is not that webinar. That is a kind of side observation.
And I'm just, but we are, the interactions is, as you say, quite dynamic. Paul's got Paul. Actually, do you want to come on, because you've got you've put a very sensible question in the chat about the proportion of workers, like your scale of liability for the proportion of workers involved.
Hiya. I've just put in the in the chat. So if an umbrella company has 100 employees and my company uses 25 of these and other companies use 75 of them, then the umbrella company doesn't pay tax and HMRC comes knocking on the door. So would my company have to make payment for the full tax that has not been paid, or would it be the proportion of the people that have the work that have purchased?
So this is where we founder against a couple of things. One is the genuine unknown, and the second, to be completely candid, is my knowledge of the exact mechanics of dealing with this kind of tax. I have had these conversations. I think what is clear is that let's look at this and say, okay, a company has gone under, it owes £100 of unpaid tax, and you have consumed a quarter of its resources. What wouldn't be being said is that you could pay £26 or above. You would be limited to £25. Okay, I think that must be right under the principle of the legislation. I think where it gets a bit murkier, and I don't know the answer, is that let's say it's more complicated than that, and it's paid, and it had a tax bill of say £100, it's paid £80 of it, and that £20 is not linked to any particular employee. Could HMRC come to you for 20 of the £25? I don't know the answer to that. I don't know how HMRC would do it. I think probably so in the way it's written. I'm just not sure that would necessarily be enforced. It's such an aggressive piece of legislation. I would hope that a tax tribunal would say, well, hang on a minute, this business has only consumed a quarter of it, and therefore £5 is their conceptual liability because it's 1/4 of the whole that is missing. But I don't know that. You're not liable just to pay. It's your supply chains that matter. It's not. You don't have to pay somebody else's tax bill that is unrelated to your supply.
Right, fantastic. Thanks for that.
That's it. So, but if it ever happens to you, get good advice quickly.
Yes.
and then cry a little bit, because tax lawyers are expensive and this stuff is novel.
So I'm going to so Tanya had her hand up a bit earlier, and she's put something in the chat, and then I'm going to go back to Karen's question. So Tanya, do you want to hop on?
Hi everyone.
Lovely.
Yeah, I did put my hand up, and then I thought I might be jumping the queue because other people had put things in the chat. So, I just wanted to clarify. You mentioned that your approach to mitigating the risk was through safe recruitment or safe rec, and so I just wanted to clarify then. So we would, in that supply chain, if we were through Nuven, we would still be a relevant party. But what you're saying is that you would mitigate the risk because you are doing that due diligence, or would we not be a relevant party because the neutral vendor is in place?
So the answer is you wouldn't not be a. Think about this. You picked up an important point. I'll start with, it would depend on the supply chain associated with the agency. So you'll remember when I talked about the umbrella conditions, there were two conditions that were met. One is the obligation to supply, and the other is the receipt of payment. So the short answer is Nuven is always a relevant party under this legislation because we deal with the dispersal of the cash, and just simply by touching the cash, we make ourselves a relevant party. Because we work in a way that allows you to have your own suppliers, although we control, if we can, who that is to control risk for everybody. You might or might not, depending on whether the employment agencies you were using umbrella companies themselves. So it's either the end client and Nuven, or it is the employment agency and Nuven. But we mitigate the risk for ourselves, but also we mitigate it for our clients. Does that make sense?
It does, yeah. So essentially, if you're sort of doing that due diligence continually, you would put the brakes on that particular supplier if you notice that there was any Yeah.
Correct. So we take every timesheet that comes through our system, we reconcile it to a pay slip on a weekly basis. We work with SafeRec because SafeRec are experts in the tax calculation. So they do the tax calculation for us. And then we reconcile that to the payment of the tax. Tax is done on a monthly basis. It's impossible to ever be 100% of this, by the way, because you do the payment is done, the tax calcs are done weekly, and the payment is done monthly. So you are always exposed to up to 4 to 6 weeks. So it's impossible. I probably should clarify this. I think it is literally impossible to be in a zero risk world with this legislation. As I say, what I would hope is that HMRC, and they do have a few of these wildly unreasonable clauses around, and it's generally so they can just stop people doing it. They don't enforce it. The mere existence of it itself does the enforcing. And I would hope they will take a proportionate approach. What I can't tell you is that the legislation allows them to do that. And I'll pick up Caroline's point while I'm here. HMRC says it doesn't matter what due diligence you do. Do whatever due diligence you think is proportionate to the risk that you face. There is no concept of taking reasonable steps to avoid joint and several liability. You just are. If you are a relevant party, you just are joint and severally liable. And if the tax is missing, HMRC will always have the right to recover that from you. What I would say is, one, by doing the due diligence, you put yourself in the best position that will never happen. And two, you can at least run the argument by HMRC, because it is, if you've done your due diligence on your suppliers, you've done your due diligence on the tax that they are paying. If HMRC rock up and put a tax bill on you that threatens you as an entity, or threatens your ability to employ people, or whatever, I think there is always going to be political and social pressure on them to not enforce that, even though it is the law. So I do think there's tremendous value in doing it, but HMRC will give you no guidance on what you should do, because ultimately that would fetter their ability to use this legislation. If they said, if you do this, we won't come after you, and you did it, then the legislation has no point for them. So they will only ever say the law is the law.
Can I just follow up on that before we go to Karen's question? So, we've got people who are in whichever it was it Chapter 7 and Chapter 11? So that's our kind of key.
Contracts for services, contracts of employment, Chapter 7, Chapter 11.
Okay. Then we've got distance through the supply chain. So, I mean, lots of members have used different neutral vendors to help them. I mean, there's a range of them, aren't they? A range neutral vendors to help them just get on top of their demand for agency support. So if I've understood what you said correctly, it like, does using a neutral vendor like you mean that extra step in the supply that protects you, notwithstanding all the work you do on your due diligence to mitigate your risk? If you've got that organization in between you and the employment agency, is that a way that we will definitely, so the further away you are from the actual direct employment of the worker, the less risk of you being caught by this.
And it's more binary than that. Although being a lawyer, I can always think of things that HMRC could do. But let's start with that. You're absolutely right. If you use an MSP and you have only a contract with the MSP and you have no contract with the workers below them, then the MSP would be the relevant party and not the end client. That is correct. And the exception that I can see there is HMRC could always look to attack what's really going on underneath. And this is what I see with some other MSPs and neutral vendors. That actually the end client has an awful lot of control over at the agency level. I think HMRC could look to attack that. I'm not saying they will. I'm saying that's one of those areas where they could look to attack it. I think what I would observe about the market generally for employment agencies is it is one of those things that has been devolved quite a long way down our clients, and that actually control over the agency is very localized, and therefore client, and this is part of the reason why neutral vendors and MSPs arose in the first place, that you end up with a large number of agencies that are largely driven by personal relationships at site level rather than by any strategic oversight. And probably that's been appropriate for the risk historically. I think that is shifting. I think boards will need to be more considerate of the risk presented by the supply chain and apply a higher level of control for it. I would certainly say it's better to have a smaller number of suppliers, and from an end client's point of view, it is better to have somebody between you and the employer of the temporary worker. Obviously, the more you do that, the less control a client would have over its agencies, because effectively it's got to cede control of that to somebody else. So I think there are interesting discussions to be had there around solutions for clients. We have taken the view that we think clients would rather have a higher degree of control around the agencies they use, subject to them being diligenced in the way that we need to diligence them, and then pass that up. But that is one of a number of solutions in the market.
Yeah. Okay. And then Karen's got a question to ask if you could explain a bit more about AI.
Sorry, can I just one other thing, of course, if you're relying on the nursing concession, MSPs don't work for you anyway, unless they do it the way we do, because you can't get the VAT concession applied if there's two companies in the supply chain. So that's also a relevant thought for this audience here. Sorry, apologies.
So Karen says, can you explain a bit more about the relationship between IR35 and joint and several liability?
Right. So IR35 is brushing up against the edges of my knowledge in terms of if we get super technical about this. But IR35 really is about who is responsible for the payment of PAYE and NI for people operating through their own personal service companies. And what the legislation has done for joint and several liability has said, if you're in a personal service company, then by definition you own that company, or you have a material interest in it. And the material interest threshold, I think, is 5%. I think it's 5% for JSL. So by definition, anybody supplying inside IR35 is going to be, or where you're asking those questions, is going to be in a company that is outside of joint and several liability. One, I think, of the interesting open questions as people react to this is we saw obviously a tremendous movement away from personal service companies following the introduction of IR35. Well, now do we see a tremendous movement back into them on the grounds that, the choice is between the devil and the deep blue sea? So I think it is going to be an interesting thing that we play out. But at the moment, if you have somebody inside a personal service company, you still need to do all your status determination reports, and you carry the risk if you don't do that you end up paying missing tax. But you don't worry about joint and several liability.
Okay.
Karen, does that satisfy your question?
Yeah, thank you. That's lovely.
Can I just make an observation? This all sounds like an absolutely total nightmare.
But the thought has occurred to me as well, yes.
Just listening.
I'm
not being close to this at all. I have tried to listen very hard to the technical aspects of this, and now I'm thinking, blimey, what a nightmare.
So it is, as I was describing it to my board, my chairman made a very good point. Strict liability has kind of existed for a while, and I think the one that people are probably most aware of is your brake lights. Doesn't matter whether you knew they were broken or not. If they're broken, you've committed a criminal offence. This is like you're being fined because your neighbour's brake light isn't working, regardless of whether he knew it wasn't, well, she knew it wasn't working. So you're absolutely right. I think part of me thinks it's an absolutely outrageous piece of legislation to take somebody's tax liability and simply say, yeah, no, somebody else is going to have to pay it. My hope, as I've said, is that the simple enormity of having done it and the response that we've done, by the way, I know from speaking to all the umbrella companies who are mediated by SafeRec, most of the other MSPs have picked up and done this because they are also relevant parties. So I think the hope is that just by the fact that this legislation exists, if you take care over your supply chain, a reasonable degree of care, by which you're either checking your agencies, you are checking your supply chains work. If you've got an umbrella company in there, you probably want to make sure it's a SafeRec accredited umbrella company, and I'll come on to why. Then actually most of what HMRC cares about will just disappear. They will recover that money in the ordinary course because people will change their benefits. So yes, it is an appalling piece of legislation. Yes, we should all be very aware of it and take proper steps to mitigate it. My fingers crossed hope is that actually HMRC doesn't enforce it because it doesn't have to, because it drives away what it really cares about, which are this 40% of employees or umbrella company workers who are in simply tax aggressive organizations. And speaking to both MSPs and umbrella companies who are regulated or are monitored by SafeRec, we only think there's a market for 8 to 12, maybe 8 to 15 umbrella companies in the entire market. SafeRec already has, I don't know the exact number, 40 to 45 now. I think most umbrella companies will simply go out of business, or everybody will know that if they're in the chain, they're only really there because they're doing something dodgy for tax. So they kind of become their own bespoke market for people who have an appetite for that sort of tax risk. But obviously that does require us all to do the kind of due diligence that we need to do.
Yeah.
I was probably a
Yeah.
little bleaker when I was originally giving this 3 months ago than I am now in practice. But yeah, I share your sentiment and have done for some time.
Oh, Shabir has got a great suggestion for us to close with. It's an ask. Can we have a lovely, lovely flow chart? Have you got a lovely flow chart? Do you fancy doing one?
Haven't got a lovely flow chart. We'll take that away and we can have a look at that.
Patrick, didn't we agree that any client that signs up with you gets a free flow chart?
Gets a free flow chart. We will take a look at it. There are some various interactions.
I love a flow chart. It really helps.
I'll see what we can do.
Oh, marvelous. Well, on that very positive response, can I just say huge thank you to everyone who's joined us across the membership, and a huge thank you to you, Patrick and Ian. And I honestly am in awe of you because it makes my head hurt. So thank you for bringing your expertise to the membership. Really appreciate it.
I did warn you.
You did warn me, yes, and you were entirely right. Although it's not as dull as I thought it would be, actually. Which probably says something about me, doesn't it? Anyway, huge thanks. Yeah, we'll share the slides, folks, and we'll see about the flow chart. So thank you very much, everybody. Huge thanks, and have a great day, and just go and get some fresh air away from the technical challenges of that. Thank you.
Thanks, everyone.
Thank you very much. Cheers all.